it's pretty hard, it seems, for market participants to take much of a position, right, between now, potentially, well into the next 2 weeks, depending on whether we get a convincing result after November 3rd.
Yeah, exactly right. We see this sort of stimulus theatre is still prevailing, and the market keeps rallying on the hope of stimulus, but really the closer we get to the election, the less likely that fiscal support will come. Congress can still surprise, but we remain sceptical on that front, and it seems like Senate Republicans are just still reluctant on the size of the package. And I think more broadly, we really have this situation where market participants just remain in wait-and-see mode. Conviction is pretty low, and I think there's a lot of fatigue with respect to that huge amount of news flow that we're seeing with this on-off fiscal stimulus. And now as the election draws closer and we really reach that home straight, the focus is now shifting towards de-risking until we have some more clarity on that big event risk and kind of taking a more balanced and nimble approach, I guess. There's really a range of outcomes from the election that we could see that have a huge amount of capacity to change market sentiment and dynamics very, very quickly. And as that election draws closer, I think it's important not to get too complacent on any outcome. There's still definitely a variety of scenarios that we could see playing out. I don't think we can rule out that contested outcome yet with a protracted negotiation of who wins the race, and certainly these reports of foreign interference only add to the capacity for either side to be able to seize upon that narrative.
So do you treat some assets in Asia as a safer haven, if you will? We've seen increased interest in Indian equities. We've, of course, seen China being a kind of a popular spot to kind of play an entirely domestic growth and recovery story there. So are we better off kind of looking to this part of the world to shield from some of that potential uncertainty in the US?
Yeah, I think it could be something that comes into play. Certainly we've seen that Asia has done a lot better relative to, I think, Europe and North America in terms of managing the pandemic. And we certainly see that Asia is going to be a beneficiary of China's ongoing recovery. We know that sort of 30% of global economic growth comes from China, and with Asia sitting in close quarters, certainly a beneficiary there. And we've really seen from China, although we have had this sort of infrastructure-led stimulus and industrial production and manufacturing growth push, we have seen that consumption is now beginning to join, and I think that does benefit Asian assets. And certainly if we do see that clean election outcome and we do see the Biden victory coming to fruition, that also, I think, adds an added beneficiary for Asian assets with the Biden administration taking a less tough approach on Asia, could support in particular technology stocks, and I think we could have as well the sort of broader impact of a weaker US dollar coming into play there, with the weaker dollar really being key to that true global reflation trade.